As we jump into the S&P 500 and the Nasdaq 100, we're talking about a few specific topics today. Now, again, before we go any further, before we dive into the video, what are the three most important factors you need to be understanding from a technical point of view, right? I say this in every video because you need to know it. It's the most important part. Now, when we zoom out really quick, we have our February highs, 12.95. Now, again, the basis of everything you need to know, until we break February highs, we remain bullish, okay? Stay with me, stay with me. Now, because when we dive a little bit deeper, we have the 3100 and then we have 3200. And this is essentially the court, right? I'm going to call it the court because all we're doing is we're just dribbling back and forth, up and down, running suicides, it seems. And we're not really making any progress. However, what we will say is there are some now bearish catalysts out there in the market. There's some bearish things we need to be preparing for that have kind of been holding us up, right? These factors have been holding us up over the past, month and a half, but now they're coming to an end and we need to talk about exactly what you need to be expecting. But before we go into that, I have to ask you to do two things. Consider liking and subscribing to the channel. We go live every single day here on the channel at 10:30 a.m. Central, Monday through Friday, and we make videos every single day here as well. So you're prepared when it comes to the market and what to expect going into it fundamentally and technically. The last thing I want to say is we do have the newsletter dropping as usual this Sunday, so you can be prepared, know everything that we're looking at. We have the S&P 500, the Nasdaq, and a few other stocks that we're liking as well, giving you a deep dive into VIX and everything in the market that has the most potential upside and what specifically to be watching. That's absolutely free. The link is down below. Make sure you don't miss that. So let's get back in. Let's talk about where we're at. Now you can even see here near the end of the day, not too much decision. You're kind of just going back and forth, okay? And this has really been the movement. But first of all, let's say why we know there's going to be movement this week, okay? Number one, this is your earnings calendar for the week. Earning whispers will be in the newsletter as well, so you can go back and track this. Now, to start the week off, we have some decent ones with Coke. You have some other ones coming out, but then we have our big tech start to release on Tuesday. Google, Microsoft, we have Visa, GM, 3M, Pepsi, Spotify. I mean, that's really just day one. I mean, Monday, we typically don't have the biggest earnings that day. Number two, Wednesday, right? And it's kind of weird that saying number two on the third day. Boeing before market open. You have Meta after close, Roku, Teladoc, some bigger names. Going into Thursday, Amazon, Intel, Snapchat, Caterpillar, MasterCard, more, Cloudflare. These are big names out there, Pinterest. And the end of the week with more oil names, okay? So you need to be preparing for the volatility that's going to come because now it's time to step up to the plate and to see if a recession is really on deck. Now, what I will say, these reports, I'm going to tell you right now before we even dive into them, before we even have them coming out a week in advance now. What do you need to understand and what do you need to know? When you're looking at these, you need to be watching a few things, but specifically, I'm not saying to ignore the earnings report, but focus on the forward-looking statements, okay? Because Netflix was a great example. If I go into Netflix and I show you the way you moved, I saw a lot of you guys commenting this is manipulation, this and that. I'm just like, okay, guys, like relax, like go outside, get some fresh air. I don't really know what to tell you, right? But it's really not, okay? Because it's the same thing that we say all the time. You have the data released, you go from 333 all the way down to lows of 291, 292, then you pop all the way back up in a matter of 30 minutes, right? 10% down, 10% back up. In the week, around 228 roughly right now. What does this mean for me? The earnings weren't great on Netflix, but the statement, the forward-looking comments, the expectations going forward continue to accelerate based on their growth plan, based on what they expect as a company in general. So you need to understand that. Now, am I saying that Netflix is going to erupt soon? No. But you need to understand the forward-looking statements, the actual call has more implications than just the earnings. Now, granted, if you come out with terrible earnings, there's not a lot we can do for you, right? But what I'm going to tell you right now is pay attention deeper and don't fall in love with just a quick number that you get, because we've seen this story with Meta, we've seen it with Nvidia, we've seen it with AMD, a lot with semiconductors, like I just said, but we've seen the story time and time again. The reason why Tesla dropped the way it did isn't because of their numbers, even though they weren't great, but it was because their focus right now isn't on making money in the short term. It's about pushing the product out and then driving the autonomy down the road. So of course, short term, it was going to have a negative effect. Okay. So understand that part. Again, the stock and the company, two different things. Fundamentals, technicals, a little bit different as well right now. So understand that. Now, going in a little bit deeper this coming week, again, investing.com, check them out. It's probably the easiest way to track news as it's coming out. Economic calendar, it's what you're going to do. We're going to go to next week. You're going to have the whole week in front of you. Now, we have PCE and GDP this week. It's already setting up. PCE is what the Fed argues to be the most important data pool when it comes to inflation. Yes, the new home sales, consumer confidence. That's not really what I'm worried about. We want to go all the way down to GDP and PCE, core durable goods. Also important. We're actually going to scroll just a further down. Oh my gosh, GDP on Thursday, and I believe PCE on Friday. Let me make sure, actually just find this real quick. And as you can see, PCE prices. And then yes, on Friday, you have your core PCE coming out as well. This will be very impactful. So not only do we have big tech earnings, what's really driving the market right now, but on top of that, you got your biggest data pool for inflation with PCE. And then we also have GDP measuring growth. So it's a stacked week to say the least, okay? So I'm going to tell you right now, personal belief, and maybe this is wishful thinking, but I do believe we're going to get out of this range this week. I have high expectations that we will get out of this 12.95 to 13.2 range on Nasdaq specifically. Going into something like ES though, what's happening here? You're still above, the median range, 41.35. We talked about this in yesterday's video. You came down, you pushed right back up. You still look solid, you still look decent. The Dow, what's happening here? Just showing you the whole market now. You're still holding up, but you're getting rejected at 34,000 flat. So you're getting rejected, but you're just sitting in that pinball region. So again, what does this tell us right now? Focus on patience. Focus on what's in front of you. Try to not think of it so much of I need to be trading. Think of it as I need to be taking better trades. I need to be waiting. I need to be patient. I need to wait for the trades to come to me instead of rushing out there and taking every trade that just comes across my desk, okay? Because at the end of the day, that's how you're going to make money in this market. That's how you're going to succeed. Understand that, okay? Patience versus quantity. Okay. You have to understand the difference. And again, I see so much people commenting down below, I took this trade today. I'm like, dude, honestly, I don't really care what trades we're taking. I care more about the quality of the trades we're taking. Today was a picture perfect day of terrible action. No reason to trade today. And I would love to get your opinion. Comment down below. I'm going to comment back to you. I would love to know your opinion on how you traded today in this terrible chop between 13.2 and basically 13.1. A slow grind to the up into the downside. Giving you for instance, one of the biggest stocks out there, Apple, look how this thing moved. All day long trending sideways. You literally sat in a 50-cent range on Apple for almost the entire day. This is textbook terrible price action. Exactly what you do not want to focus on, in my opinion. When this happens, I get up, I leave, I take a walk. I just get away from my desk because nothing but trouble comes from this type of price action, in my opinion. So that's what I'm doing right now. Okay, I try to practice what I preach. If you're in Discord today, you're like, Tyler, you didn't really trade anything. Only thing I tried to trade today was Caterpillar, right? Dow was the weakest sector. I tried to trade it. You had a descending triangle down here, formed out. You broke above. Invalidated, was done for the day, didn't touch once again, right? So that's what we looked at today. That was it. Small trade, got in, got out. Going forward, though, that's the expectation. I'm not going to BS you. I'm not going to tell you anything crazy. But what I'm going to do, we're going to go over a few stocks I'm liking for earnings this week, okay? And give you a quick opinion, quick rundown. Coca-Cola, Pepsi, those are always going to be some of your better names. PEP, ticker symbol KO. Those are your best names, okay? Those typically perform very good. But what I will say, and I know people are gonna have questions about these really quick, going into KO, as you can see here, go to the 4 hour and take after hours off as well. You are dangerously close to, local highs as well. And you're gonna notice the same thing on Pepsi. Coke, you have a little bit more room, maybe up to 65. But again, there's nothing worth playing here on earnings for myself. Going into Pepsi, you're absolutely killing it. You're doing what you always do, double top potentially. But with earnings, again, not trying to play this right here. Pepsi typically kills earnings and has been killing it with all the inflation reports as well. Now, if somehow Pepsi starts to dip, you get the double bottom confirm or double top confirmed there, and you start pushing back down, then we're in business to talk about breaking down a little bit deeper. But until then, we're not interested. If earnings come out good, you're looking to trade this thing, in my opinion, up to 190, 195, and it will have momentum. Next up, I do want to talk a little bit about Microsoft. Now, Microsoft, this is where things are going to get interesting. Microsoft, Google, those are going to be your big names to watch for earnings here. You're going to get a lot of talk around AI, a lot of talk around the future of AI and the future income from AI. Now, Google, more skeptical for myself than Microsoft, because Google, if you don't understand, they make their money around AdSense. Microsoft, they just want anyone to get on Bing. There's a difference. Google dominates. Bing is kind of low-tier garbage, right? So Microsoft is like, if we can get anyone on our platform, if we can get anyone using our search engine, awesome. And ChatGPT is driving people to the search engine, okay? So you want to see overall growth from Microsoft, and I think they have potential to really start to push up, okay? I think in the newsletter last week, we talked about the possibility of them pushing to 300. I think this week, it's a lot more possible and a lot more likely. Again, if you start breaking above 294, you have room up to 306 and then up towards 316. So again, Microsoft, probably one of the top watches with earnings going into this week. Google, what I will say is you are dirt cheap. It's probably one of the cheapest names out there right now. It's one of the mega caps. You're still way down, 105 local highs or all-time highs around 151. You're still getting it for like a 35% premium discount, okay? I mean, at all-time lows or at 52-week lows, you're at 83. I still love Google and Amazon as far as value. Amazon's already run quite a bit, but understand that. Next up, Roku, Meta. Talk really quick about these two, and I'll talk about Boeing. So first of all, let's go into Boeing. Boeing, very cheap. They've had some things that have kind of dragged them down. As you get closer to 195 to 200, I think there's upside potential. The major thing on Boeing here as well, as you go into the weekly, you clearly broke out of this downtrend going all the way back to 2019 we talked about. Possible, it's not really a bull flag, but you're consolidating over 198, 200. Very strong behavior. Boeing continues to get bigger and bigger orders, and they're kind of set up for continued growth and upside over the next few weeks and months. So I think Boeing's earnings probably propel you to the upside. I'd be looking more at stock rather than options though, and I would be probably waiting until after the earnings to start attacking them, because chances are if they report decent, like we come back in here to Trading View and you can see we'll go to the daily, we'll go back to the last earnings. As you can see back here, you don't typically get the craziest movement from those earnings, okay? But back here, you had some bad earnings, kind of pulled you down, and then you kind of just kept going up and up and up because you had more room to go. But right here is when you hit those local highs, and then you've been consolidating here since. So with the right earnings, and I do think the earnings can be really solid on Boeing, you have room to push back into 215, 220, maybe even get the breakout you're looking for there. Meta and Roku, honest to God, hate the company so much. People always ask me about it. I have no desire to trade it. Roku, you're underneath the 200 SMA. I'm not interested. If you have good earnings, maybe you mount the 200 SMA and push up. But even if Roku has good earnings, I would rather just trade Netflix over Roku. Netflix should get some upside and be lifted up if Roku performs well. And Netflix as a whole is still holding up very, very well. I still like Netflix. I like Netflix over Roku. Not interested in Roku. Absolute dog water, absolute trash. Going into Meta, this is probably one of the biggest names out there right now. Now, Meta, this is where things get crazy, because if Meta can start breaking over some of these big levels, we're going to be having a pretty crazy conversation, and people aren't going to like the conversation. Okay. Meta as a whole, absolute monster. It's been monstrous since they announced the possibility of integrating payments into WhatsApp and running fees on those, right? For instance, something like Brazil, which is something they're trying to attack. If you don't know, Brazil has a crazy corrupt monopoly in the banking sector there, right? There's like 4 total banks. They all charge outlandish fees. It's absolutely ridiculous. If someone like Meta comes in with WhatsApp, which is basically used by a third of the entire population, and they have an instant payment transaction system on their platform and they charge 1%, it's gonna just roll right into them, or even less, or whatever they're charging. Meta could dominate. And since that news came out, was down here like at 170, 180, you just gone up. So Meta, I'm kind of on the fence of like, what are they going to really talk about? Because they always talk about this, metaverse. And I'm just like, guys, shut up about that. Talk about the, premium plan on Instagram. Talk about how you're going to make, check marks, push out better content, and how much you're going to make subscriptions boost your revenue, how many people are going to subscribe to the overall estimates, like with Twitter, right? Talk about what you're going to do with this payment system. If they mention that, you have upside, you have breakout potential, okay? But if they don't, I'm worried. What I will say, if everything goes well and you get the push up, one, you have room up to like, 240, 235. But if you break above 240, this is going to be one of the better looking plays in the entire market. And I know people are going to be upset. I don't really care what you say. You're crazy illiquid up into 290, 300. It's beautiful. It looks great. Only comparable thing I can say it looks, kind of like is like when Netflix broke above 250. Remember how quick we pushed up to 300? I do, because we talked about it here on the channel a lot. So you still look really good on Meta. Like it. But again, sitting on the sidelines, waiting to see what they mention. If they mention the right things, you have crazy upside. Caterpillar, Amazon, Intel to wrap us up. And oil names, I think they're all oil names are going to do well. So there's nothing really to talk about there. So Intel, Amazon, Cap. Caterpillar, less than excited. They've had some kind of bad news surround them lately. You're curious if they can start fighting back and bouncing. The one thing on Caterpillar that I do like, though, is that you are consistently holding one major support level. And it's at 200 SMA. Right down here at 214. I tried to short it back down to there. You just keep bouncing. You bounce. So as long as Caterpillar holds this, you'll look good to the upside. Okay. Again, it's not something I'm looking to play through earnings. And if I'm playing anything, I told you the ones I like the most. Intel, I hate Intel. I mean, honestly, I don't think you look the greatest. If anything can hurt semiconductors, it's probably Intel. But what I will say is that you're at a major inflection point and you're holding this overall level. If there's ever a time technically to go long on Intel, it's kind of right now, but be careful, be safe. Not my favorite name. It gives a bad rep to all semiconductors. They're just kind of not innovating and not doing anything new. Last one, Amazon. Amazon, it's been a beast, right? We mentioned this on Twitter a few weeks ago. We liked it a lot up into the 200 SMA. Today, it did its own thing, went crazy by itself, and you kind of mounted the 200 and you're kind of sitting under it now. If you can actually continue to go and push, right? We need above 109. Above 109, the likelihood of you testing 120 is incredibly high. So you have to understand that. I don't know if Amazon is going to be doing well, though. I think Amazon, of all these companies, has the highest chance of missing personally. I think consumers are getting hit. Consumers are spending less. And I think Amazon could get hit. I think everyone uses Amazon. People are still probably using it. But at the same caliber of where we were using it 3-4 months ago, I think Amazon could possibly be in trouble. And they probably take, the bad end of the stick of the quote unquote recession that we're expected to be going into, even though we've kind of dropped tremendously over the past year. So that's my expectations on earnings. That's what I'm looking at. If you have questions, comment down below.